I have been covering some of the best ETFs for maximizing growth, maximizing dividend income, and minimizing downside risk. But of course, no portfolio is going to be made up of just one ETF. There are going to be combinations of different ETFs together that give investors balanced exposure to the overall market. And most importantly, these ETFs have to complement one another. I often focus on the typical growth and value mix, but with a powerful twist, and that is maximizing dividend income by incorporating high-income ETFs, such as covered call ETFs. This enhances income generation while also reducing portfolio volatility. And for those who don't know, covered call ETFs sell call options on their underlying holdings to generate premium income, which is then distributed to investors in the form of a dividend. And these high income streams cushion price fluctuations in a way that traditional dividend ETFs can't, which is why they typically have beta values below 1. But here's where it gets interesting. I am going to show you a high-income portfolio strategy that provides an extra edge, one that I personally use. This strategy not only maximizes income, but also enhances growth potential, all while maintaining strong risk mitigation. I will also show you how I would structure this powerful strategy with a 2 ETF combination, and how to best allocate your portfolio by percentage across these assets. How can you boost the growth of a high-income portfolio while still maintaining the low volatility characteristic that conservative investors value? The answer lies in one of my favorite investing strategies, and that is momentum. Momentum investing capitalizes on strong upward trends. It ranks stocks based on their recent price performance, essentially allowing you to ride the growth wave. But it becomes even more powerful when you target financially healthy companies with growing earnings and profitability, adding an extra layer of risk mitigation, because there's a big difference between a stock that appreciates steadily and one that skyrockets 30% only to suffer a 20% drop. So by combining a high-income ETF portfolio with momentum investing, you're not just maximizing dividend income, you're potentially creating one of the most powerful all-around portfolio strategies available. So what exactly is this portfolio strategy? First, we're going to start with a powerful ETF combination, JEPQ and DIVO as the foundation, and then we're going to build from there. DIVO is a well-known dividend ETF with exposure to large cap value stocks, providing a yield of around 5%. But what makes it unique is that it layers on a covered call strategy to further enhance its income, providing superior returns compared to many passive dividend ETFs. JEPQ, on the other hand, is a covered call ETF on the Nasdaq 100 with exposure to big tech, offering a dividend yield of roughly 11%. Together, this combination gives you a very powerful growth and value mix with very high income. They have minimal overlap, and combined, they offer investors impressive growth potential. Now, in order to boost growth, well, I still wanted to maintain majority exposure to my base ETF so that my risk is managed. Therefore, I decided to incorporate individual momentum stocks instead. This is where I leverage the Alpha Picks portfolio. Alpha Picks is a stock portfolio from Seeking Alpha that uses momentum investing as its primary stock picking strategy. The portfolio doesn't just chase momentum, it also prioritizes strong financials, focusing on companies with growing cash flow, expanding profit margins, and on top of that, it also uses in-depth quantitative analysis, meaning that it incorporates powerful risk management tactics for long-term performance. Remember, stocks that display strong momentum characteristics are gaining investor trust, which often makes them more resilient in market downturns. And that is exactly what I was looking for to complement my dividend-focused portfolio. When you look at Alpha Picks' performance since inception, you can see that it has outperformed the S&P 500 by a huge margin. That level of outperformance is incredible. As always, past performance is not indicative of future results, and this is not financial advice. I am simply sharing one of the tools I personally use to enhance my own research. Even capturing just 10% of that growth and integrating it into a dividend portfolio can amplify total returns and compound exponentially. What's even more intriguing is how the portfolio achieves this growth without taking on excessive risk. During market sell-offs, Alpha Picks has shown similar downside volatility as benchmark ETFs. And that is because it is a highly diversified portfolio with over 50 individual holdings, and no single stock makes up more than 1 to 2% of the total portfolio. Over the past year, despite all of the volatility we've seen, Alpha Picks has managed to deliver double the total returns of the S&P 500. And looking here, in the past 6 months, 3 months, the portfolio again has nearly doubled the S&P 500's returns. Now, if you want access to the same comparison tools, charts, ETF screeners, and ETF deep dives that I use in all of my videos, then I highly suggest to sign up with Seeking Alpha. And right now they are running their Black Friday sale with 20% off site-wide. That includes $60 off their annual premium plan, $100 off their Alpha Picks portfolio, plus savings of over $220 on their premium and Alpha Picks bundle. I highly suggest to take advantage of the sale before it ends. You can use my link in the comments section or description down below, and once again, you get 20% off site-wide on Seeking Alpha. So when you combine this powerful momentum strategy with an ETF combination like DIVO and JEPQ, you end up with an extremely strong portfolio. One that not only generates a high dividend yield, but also captures fantastic growth momentum, all while mitigating downside volatility. And the best part, you are diversified across multiple sectors. You're getting exposure to big tech, value stocks, and small to mid-cap stocks with very little overlap. All right, so let's get to the main question. What would a high-income dividend portfolio look like when combined with Alpha Pick stocks, and how would it perform? Let's break it down. So first we have a simple 50-50 split between JEPQ and DIVO. This provides a balanced approach with exposure to both big tech covered calls and large cap value with covered calls, resulting in a very high yield and a balanced risk profile. Next, we have a portfolio with 90% exposure to DIVO and JEPQ, where I have allocated 60% to DIVO and 30% to JEPQ. I keep a heavier allocation to DIVO to prioritize lower volatility, helping to offset the added volatility of the Alpha Pick stocks. Then the remaining 10% is allocated to the Alpha Pick stocks. And finally, we have the third portfolio, which allocates 15% to Alpha Picks, 55% to DIVO, and 30% to JEPQ. Now let's look at the potential performance. If you had captured just 10% of Alpha Picks returns over the past 3 years, your ETF combo of JEPQ and DIVO, which on their own returned 46.5% in total returns, would have instead delivered 58.2%, boosting your annualized return rate from 13.6% to 16.6%. And if you allocated 15% of your portfolio to Alpha Picks, your total returns would have exceeded 65%, with an annualized return rate of over 18%. For dividend investors looking to maintain a conservative outlook, keeping a small allocation to Alpha Picks allows you to boost total returns, compound growth, and still manage risk exceptionally well. Like I mentioned earlier, individual stocks carry much more risk compared to ETFs. However, with the heavy diversification of the Alpha Picks portfolio, much of that extreme risk is mitigated. For example, during the sell-off at the beginning of 2025, the Alpha Picks portfolio fell by 21%, which was roughly in line with the Nasdaq 100. By comparison, a portfolio consisting solely of DIVO and JEPQ in a 50-50 split would have experienced a drawdown of only around 16%. Now, if we just adjust the portfolio to include a 10% allocation to Alpha Picks taken from JEPQ, the total drawdown would have actually decreased because we've increased our allocation towards DIVO to compensate for the added volatility risk. And with 15% allocated, the drawdown would still be less given the increased allocation to DIVO. So as you can see, in this case, a small allocation to Alpha Picks did not increase downside risk by any means. Of course, situations may be different where the Alpha Picks portfolio could suffer more, but again, you're compensating for that risk by increasing allocation to the value portion of the portfolio. And one thing I really appreciate about Alpha Picks is that they provide 2 new stock picks every month, accompanied by in-depth articles explaining each recommendation in detail. So this isn't just a blind stock picking notification service. You get comprehensive research and reasoning behind every pick, allowing you to evaluate each opportunity yourself. On top of that, they also provide timely sell signals, helping you stay up to date in an ever-changing market environment. That is why I emphasize the importance of combining momentum strategies within a portfolio. It is one of the most effective ways to maximize both longevity and total returns. Generating a high dividend yield is crucial for income investors and retirees, but the ability to boost your annualized returns by 2% or even 1% can have exponential effects on your portfolio's growth over time. And you can clearly see that in the examples we've discussed today. But remember that if your priority is to maximize dividend income, then keeping a smaller allocation towards Alpha Picks will help maintain your portfolio's yield at very attractive levels. Speaking of yield, let's break that down. Going back to the ETF combo, a 50-50 allocation between DIVO and JEPQ provides an average yield of around 8%. And even when you allocate 10% to Alpha Picks, your yield remains around the same level while your annualized growth rate increases substantially. So you're seeing minimal impact on income, but a significant boost to your portfolio's total return potential. For growth-focused investors, you could allocate up to 20% or even 25% to alpha picks, but of course, that does come with higher downside risk. But ultimately, the balance is up to you. So, in my opinion, combining high-income ETFs with the Alpha Picks Momentum portfolio is an excellent strategy worth exploring. But keep in mind, it's critical to categorize the characteristics of each investment in your portfolio to ensure that they all complement one another effectively. And above all, managing your risk exposure is key to achieving long-term success and financial longevity. Now, Seeking Alpha has kindly sponsored this video, which means that you guys are able to get $100 off the Alpha Picks portfolio by using my link in the description or comment section of this video. You can also get $60 off their premium plan, which gives you access to all of these tools, comparison charts, ETF breakdowns, and more. And that is all for this one. If you haven't yet, make sure you subscribe to my channel and hit that thumbs up button for the YouTube algorithm. Thank you guys so much for watching, and I will see you in my next one. Bye! This video is for educational and entertainment purposes only and is not financial, investment, tax, or legal advice. Discussions of ETFs, investing strategies, market updates, or specific funds are general, not tailored to your financial situation, and should not be relied upon for decision making. Investing involves significant risks, including total loss of principal, and past performance does not guarantee future results. I am not a registered financial advisor. My content reflects personal research and publicly available information. I may earn affiliate commissions from mentioned products or links disclosed per FTC guidelines, but these do not influence my opinions. Always consult a licensed financial professional and verify information independently. By watching this, you agree I am not liable for any losses or consequences from your actions. International viewers should consult local regulations.